You are listening to chartingwealth.com for Wednesday, the 22nd of August, 2018. We see stocks up for the day. We see 20-year bonds down. We see gold up. Let's jump into these charts. Thank you again for everyone who's purchased our book, Charting Your Way to Wealth. If you look in any of the show notes, whether it's at YouTube, it's at chartingwealth.com under our daily reviews, if it is on our iTunes, however you're listening to this, you will see a link to how to purchase the book. Please purchase it. It explains everything you need to know about what we do. We're very proud of it. We've sold lots of them. I think we're into our 5th printing, about to go into our 6th printing, and we want you to have a copy, and it will help you understand what we do, why we do it, how it works, and of course, it helps support our channel and the daily work we bring to you for free and have been doing so for years. Let's jump into it. On the S&P 500, as depicted by SPY, the exchange-traded fund that tracks the Standard & Poor's 500, those 500 big companies, we see that we are going into another week of up movement, it appears. Again, it's just 2 days now into the 5-day candle that represents a weekly candle. These are Heikin Ashi candlesticks. 80-something thousand people have listened to that special training we did on Heikin Ashi candlesticks. You can find it on the web. It's the #1 training on candlesticks. Heikin Ashi, Heikenen Ashi. They are, it means average pace in Japanese. They are actually track much differently than regular candlesticks, which are high open, low close, and they help us find the average pace of what's going on in the index, ETF, stock, whatever it is that we are tracking. So we see the derivative oscillator gaining upward momentum so far for this week. Price percent oscillator heading up, green open box candle, a decent size, up 0.23%. We go from the weekly to the 2-day. What do we see? First day of this latest 2-day candle is a big candle. Again, the average pace increasing quite strongly. And of course, we see the price percent oscillator, which has been very flat. It's slowly moving away, it appears, from the red signal line. Not tons of strength moving away. Derivative oscillator moving up. But let's take a glance at that 4-hour chart. And of course, we had it cross over late in the day on Friday. We had a jumping in point in the morning or right there in the afternoon, around noon, whether you went in at 10:30 or jumped in at noon. Once the 4-hour candle closed, we've seen things, of course, bump up again up in the morning and pretty much sliding over into the afternoon. Derivative oscillator has gained a little bit of energy. Price percent oscillator heading up. So, of course, that jumping in was correct. It follows one of our 2 main methods for trading. One is a weekly vertical crossover. That's typically jumping in around 10:30 the following Monday. The other is what we had here, where we have both our weekly, what we call our long chart, and our medium range chart. That's the 2-day, both going in the same direction. A pullback in the 4-hour chart, and then it crossing over in the direction of the weekly and the 2-day. That's what we had here. And again, we're trend following. It is that simple. But again, like everything else, think about the stock market in general. You just got to guess which direction the market's going in. It sounds super simple, a binary decision, either up or down, right? Well, it's not that easy. That's why we trend follow. We let the trend be set, and then we jump in at the right point. You don't want to jump in too early, and you don't want to jump in too late. That's why we let the trend get established and follow it. Okay, from the S&P, that makes great sense, doesn't it? From the S&P 500, we go to the Qs. That's the NASDAQ 100. Not nearly as much up movement as we see with the S&P. In fact, it looks like it's trying to cross over going down. Hasn't done it yet. We see that we had, over the course of the prior week, a red spinning top, which means indecision tending down, to a green spinning top, which means indecision tending up. Price movement is above the weekly trend line still, although we see the derivative oscillator so far, 2 days into the 5-day candle, losing energy, and looks like it's trying to cross over going down. Hasn't happened yet, but trying to do that. We'll see how it bears out throughout the course of the week. So far, this latest candle, after 2 2-day down candles, 4 days of down movement, trying to move up again, up 0.37% for the day. Just the first day of this latest 2-day candle. Price movement is above the weekly trend line. And of course, we're still in a confirmed down move on the 2-day chart. So it's going to have to cross over going up before we have any chance to trade on any up move. Derivative oscillators losing just barely some downward momentum. Price percent oscillator still decidedly down. We go from the 2-day to the 4-hour, and of course the 4-hour's not even crossed over going up. So continue to keep your eye on things. That's the price percent oscillator. Derivative oscillators switched over to the positive, but not strong up movement compared. I mean, we saw some up movement in the morning and then sort of petering out in the afternoon. And again, not enough to even make the price percent oscillator flip over. So we'll keep watching, and when and if we have a trade anytime soon on the Qs, we'll let you know. So from the NASDAQ 100 and both of our stock indexes, the S&P and the Qs, excuse me, we go to TLT, 20-year bonds. What do we see going on there? Well, still in the negative on the derivative oscillator. Price percent oscillators remained in the positive. So far for the week, trying to move up. We've got a green up candle. We go from the weekly to the 2-day, and of course we had 4 green strong up candles. So far this latest candle is a red. Open box means that again, it's not a closed red, so it's not super down movement. It's just cautionary. Price movement is above the 2-day trend line and above, well, it's not much of a weekly. That's pretty much flat. But we're continuing to watch things. Now the 2-day has crossed over going up. The weekly is in an uptrend, so we go from the 2-day to the 4-hour, and of course we've got to have a pullback. Maybe that will happen soon. We see the derivative oscillator losing momentum, price percent oscillator heading down. Going to have to wait for that pullback and then a movement up again before we can jump in, sort of long in the tooth since that crossover going up all the way back on Friday, the 3rd of August. So we'll just wait and see how these charts bear things out. Lastly, we go back to the weekly. We go to gold, up 0.29% for the day. Now, gold has been in down moves. Well, it actually originally crossed over going down back on the 16th of March. And then after that went up for several weeks and then really started moving down in earnest around the 27th of August. But for 3 up weeks since then, has been very strong down. We see that price movements well below the weekly, below the 2-day. Derivative oscillator, however, is losing some downward momentum. Price percent oscillator not heading down at the same strong angle it had been in the prior week. And again, just 2 days in, but we're paying attention. What do we see going on that 2-day chart? Well, we see a sideways slide and a bit of up movement. Derivative oscillators turn positive. It did the same back on the 2-day candle on the 10th, and this is just the first day of the latest one, so we'll continue to watch things. It's a pretty decent pop-up on the derivative oscillator. Price percent oscillators still negative, so remember, 2-day still in a confirmed down move, as is the weekly. Now, what's going on that 4-hour chart? Well, it's continuing to track up, and we'll continue to watch things. If it turns over and starts heading down again, before the 2-day crosses over going up, then of course we've had that pullback and we can jump in and ride it down again, as we did when things crossed over back on the 13th and we had some nice down movement. Somewhere around 114, anywhere 113 to 114, all the way down to a low of 111.06. So again, not bad down movement for about 2 days after again that trigger was pulled on after a pullback on a move over going down. Now, those of you who hear me talking about how do you make money when gold goes down, how do you practice trade that? That is called shorting it, and you can get into an inverse gold fund. We've talked about the problems with that, or purchase a put. I encourage you to listen to our training, Inverse Funds, How to Make Money When Markets Crash. That's another good video training that we have available. You can search that on the web. You can find it at our website, chartingwealth.com, and at our YouTube channel. Please subscribe to both. Our daily review is for free at chartingwealth.com, and also subscribe at our YouTube channel. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.